Hello, thank you for joining us today. Andrew and I are just going to spend a few minutes talking about the key points that we picked up at this week's COLP and COFA Conference in Birmingham. We thought it was a really interesting day and lots of topics covered, so we thought we'd just focus on a couple that are most relevant to law firms and our clients. So let's kick off then. Andrew, hi. What did you sort of have as the main takeaways from the sort of the initial part of the conference where the outgoing CEO and the chair sort of chatted about the SRA's priorities and so on?
Yeah, so as you say, it was a really interesting day, and I thought the tone was markedly different. So last year they were quite indignant in the wake of the Axiom Ince report and the LSB's sort of censure of them. But this year they did hold their hands up and they accepted that they got things wrong, which was refreshing. In terms of what they're going to do about it, they did say that they are going to be requiring more data from firms working in high risk areas, and they sort of expressly mentioned high volume consumer claims, which is obviously the SSB issue, conveyancing, and immigration. So I think the idea is that they feel they need more data to be able to spot risk. I don't really know how that ties into the SSB report, because they obviously received lots of reports there and didn't act on them. But anyway, they seem to think that there's a data inadequacy, or they're not getting the right data to be able to properly assess risk. So that was one thing that came out of it. And then the second one I wanted to talk about was the client money consultation, which was also on the agenda last year, following the misappropriation in the Axiom Ince case. And Pavlovic reported that there'd been a negative response from the profession to the proposal that firms should no longer hold client money, but the SRA still think it's a very good idea. It's not on their agenda immediately because they're still dealing with the SSB and the Axiom Ince fallout, but they definitely are going to put it back on the table at some point. And in the meantime, there's a consultation being launched next month in relation to sort of bits around the edges. So accountants' reports, and whether there's now going to be a requirement to file them and not just file them if they're qualified, and also potentially splitting out the COLP and COFA roles so that you don't have a situation like you had in Axiom Ince where there was one person that held all of the compliance roles in the business. I think that's quite interesting. And Pavlovic did say that they would need to be proportionate, because if you have, say, 2 or 3 partner firms, it might be sensible for one person to do that. And in fact, we know there are large firms where you have someone whose sort of full-time role is compliance, and they hold all of those functions as a result. So it probably does need a little bit of consideration. But the principle of it, I think, would seem to make sense, that you do have a division of the roles within the business to spread the risk of someone not complying with their regulatory duties. Those are my main takeaways from that initial discussion.
Yeah, I think that's interesting, and I went to the kind of the full session on that sort of client money consultation, and that point was raised quite a lot. And while it was going on, I was thinking, but actually all of the SRA sort of authorised managers have got those responsibilities, and sort of I wondered whether that change might sort of focus and sort of make those role holders sort of more accountable, or suggest that they have greater responsibilities than the overall managers, and that just didn't feature in the discussion at all, which was weird. But again, we'll see with the consultation. The other thing I thought was really interesting was that there was a very strong message that they felt that the SQE route qualification was very much working, and Pavlovic was really clear actually that it was intended to be super hard, and recognised that a lot of people, that the pass rate is low and a lot of people are failing on the first attempt, and he acknowledged the cost and burden that places on those people entering the profession. He was asked a question about whether there are too many people entering the profession, as in the number of people who are qualifying versus the number of roles for newly qualified lawyers, which he acknowledged but didn't actually answer that question. So that was a bit frustrating. And I guess for me, the other really interesting thing that he touched on was the role of AI. He was very clear to us in the conference hall that AI is playing a huge role in legal services, and that we can't ignore this as the profession. But what was quite interesting to me is that the SRA clearly haven't got a plan on how they're going to be regulating these new risks. They're obviously aware that they're out there, but it will be really interesting to see what happens there, because it's clearly on their radar.
Yeah, I thought that was interesting as well, because he talked in here about there being a sort of a learning curve at the moment, and the SRA needing to do something, but he did stop short of saying what that was. I mean, presumably it would be some form of new guidance or something about that, but
Yeah.
yeah, we'll have to wait and see. And I know you managed to glean some insight on what they are proposing in respect of oversights of mergers and acquisitions as well. Can you discuss that a
Yeah,
little bit?
that was interesting. They didn't mention it in the main sessions, but there was an opportunity to talk to lots of the teams in the sort of what do they call it, the marketplace, which was a bit twee. But actually, it was a really valuable opportunity to talk to people who work in the SRA. I actually really liked it as a sort of an idea. Yeah, I mean, it picks up on the points that you just mentioned about Anna Bradley. Apologising for the SSB stuff, albeit possibly only after pressure and formal criticism. So we were able to sort of ask those questions, and it sounds like there's going to be a consultation in 2026 on what they should do in terms of merger activity, sort of oversight of transactions. The preliminary indications, and they were just ideas, was that there might be sort of 3 possible routes, maybe, possibly some kind of general notification, a bit like the sort of thing you do when you're doing the closing down your firm notification, which of course could be relevant on a merger transaction or an acquisition, but won't always be. It depends on the structure you choose. Then there was a sort of a middle option, which was kind of notifications with particular focus on high risk areas, for example. I mean, didn't really go into detail on that. I don't think they've got the detail on that yet. And then the third option under consideration, by the sounds of it, is a sort of a formal approval process. And we sort of had a chat about, the difficulties that something like that might represent in terms of delays to timing and so on. And I think they're aware of those sorts of thoughts. And they said that they're hoping to take it to SRA board pretty soon, probably in 2025. So it does feel like there's some movement on what that will look like. It sounds quite constraining of that sort of activity, which I don't think will be welcomed by the profession, and certainly in light of the PE activity we're seeing and the pace of that PE activity, I think that will be unwelcome. But again, we have to wait and see what the details of the proposals are, and I think they have to be seen to be doing something in the wake of Axiom Ince, because they've faced such criticism. I mean, whether this is the answer or not is a different question, but certainly that's the direction of travel being communicated by the SRA at this stage. One thing about the day for me, Andrew, and for you, I know, was well, actually for all of us, was the fact that they were talking about their AML program and so on. But at midday, there was this announcement from the government that actually the supervision of AML activities are all going to be centralised in the FCA, so effectively being taken off the SRA, which, I mean, it wasn't a surprise to the SRA. They obviously knew about it, but clearly it wasn't sort of expected, because a lot of the sessions were planned a little differently, I think. It'd be interesting just to get your views on, although the SRA didn't cover it at the conference, it's such a huge topic, whether you can offer us any insights on what the main drivers behind this decision might be and what kind of the immediate implications and challenges might be.
Yeah, I imagine the main driver is to sort of secure consistency across sectors in the way that they deal with AML matters, which obviously makes sense. Sort of the immediate issue is the amount of work and the amount of burden that will put on the FCA. I mean, if you think of all the activity that the SRA did last year, which they sort of set out in their conference, I think they said they had 864 proactive engagements in 24-25, and obviously the FCA has their own banks to regulate. They're taking over accountants as well. So there's going to be a huge job, and they're going to lose, assuming that we don't see lots of people en masse going from the SRA to the FCA. They're going to lose that sector expertise, and there's clearly going to need to be a lead-in time while they get up to speed. But I think there is a risk, I suppose, if you do it all in one way. Yes, you achieve consistency, but the downside is that different sectors do work slightly differently. The driver makes sense, but I think it does present a number of challenges.
Yeah, of course.
Potential issue of dual regulation, which obviously there will be, but also the potential for, say, parallel proceedings. So if the FCA's focus is purely on AML and the SRA is still there to deal with misconduct, there's certainly cases where those two things overlap. So if someone has, for example, signed a declaration stating the firm has a risk assessment in place where they don't, that raises questions of honesty, integrity, etc., which would seem to still fall within the SRA's domain. Another sort of case where we quite often see overlap between AML breaches, with accounts rule breaches is using the client account as a bank account. Sometimes they are completely distinct and there's no AML elements, but quite often they can be interconnected as well. So you could have sort of parallel proceedings, which I don't think anyone would particularly want, because that would obviously increase the cost to firms and individuals that are under investigation. And
Yeah.
finally, the other point was just in relation to the investigative powers. So the FCA has broadly similar powers to the SRA. FCA's powers are in FUSMA, the SRA's powers are in the Solicitors Act 1974. One thing the SRA is able to do, or at least it claims it's able to do, and no one's really pushed them back on this, is to be able to review privileged correspondence between solicitors and their clients for the purpose of their investigations. So will there be some kind of enabling legislation to give the FCA equivalent powers? These are all questions that remain unanswered at this stage.
I think you're right, and I think law firms will also be asking some really big picture sort of questions like, will the FCA be able to strike lawyers off? Will the FCA be able to sort of shut down law firms? I mean, everybody is always concerned when the SRA is subjecting them to scrutiny, because fundamentally there are draconian sanctions that could bring everything to an end. And I wonder whether that might affect compliance behaviours if the FCA can't, for example, and the only sanction that are likely to be seen is guaranteed to be only, for example, fines. Might that affect behaviours? I mean, one would hope not, but who knows? And I guess the really big question for law firms is, who's going to pay for this? How is this going to be funded? Because obviously people are already very focused on the rising cost of practicing certificates, and you can't see the SRA being happy about sort of sacrificing a portion of that, even if its remit is sort of reduced to not cover AML. But clearly the FCA bringing everybody into its supervisory under its supervisory umbrella is going to cost. So law firms are going to be very focused on that question of cost at a point when things are really squeezed. I mean, the other big news for law firms this week, especially those law firms structured as LLPs, is the potential imposition of national insurance on partners. Now, I don't think we should discuss that any further because it is purely speculation at this stage, but it's just another great example of the pressures that firms are facing and increased costs and so on. And so I think that law firms are doing a lot of thinking about sort of the long-term profitability and prospects for themselves, which is, a tough place to find themselves. I guess, Andrew, on those FCA announcements, there wasn't a lot of detail. Do we have any sense of timescales, or I don't know that we do we?
No, not really. The government announcement said obviously they'll need to introduce legislation, so that process in itself will take time. And then there'll be an implementation phase where things will need to be handed over sort of formally. In the meantime, the SRA are pushing on, and they've announced that their next thematic review will be on policies and procedures. I think it's reasonable to assume that they will be in place for the majority of, if not all of next year, and that this will be looking at something in 2027.
Yeah,
that'd be my guess.
I would agree with that. That seems quite likely. And I thought what was really interesting about that particular aspect of the conference was they talked quite a lot about the mismatch between what people have written in their policies and procedures and what actually happens in practice. So I don't quite know how they're going to sort of focus on that, but clearly that's an area that they're going to require law firms to be really focused on for the next year, as you say, which we do expect them to be in situ for. I think those were the main things. Was there anything else that you were hoping we'd pick up from the discussion?
The only other thing was the Mazur case, and Pavlovic indicated that they're due to publish guidance on that next month. But he said he did reiterate that he didn't find the outcome of that case to be surprising, and it reflects existing SRA guidance on supervision. So I don't think it's going to be groundbreaking, but he did say that there's going to be some guidance on that published next month.
That'll be interesting. And of course, by then he won't be in role anymore. We'll have the new CEO in place. So it will be interesting to see whether that new CEO has any influence on the sort of direction of travel of the SRA if things change under a new leader. There was no suggestion at the conference actually that was likely to be the case, but that's another sort of watch this space issue, isn't it?
Yeah.
Fabulous. Great. Well, it's been really nice to chat to you about this, Andrew, and thank you to you all for joining us. If you'd like to chat about any of the issues that have been raised, please do reach out to either of us by email or pick up the phone. In the meantime, I'll see you in Birmingham next year, Andrew. Very much.